Happy New Year, everyone. Welcome to tonight's end of year market debrief. Okay, what we have here on the screen is the S&P 500 index, and from here what we can see is the full 1 year performance of the S&P 500 index. So what we can see on here right at the top end here is where the closing on the 31st December, and the S&P 500 is up 15% for the year, despite this big 34% drop when they locked down for the COVID period. So what should we be expecting for the coming new year? Now, over the past 6 months, the S&P 500 index has been on a uptrend, a steady uptrend. You can see it's a higher high, higher low, higher high, higher low. Alright, so at this moment it's making a higher high with the 50-day and 200-day moving average, right? It's moving upwards, pointing upwards very parallelly, which is a good sign. Okay, so I'll be expecting the first 1 to 2 months, right, to be positive for the S&P 500 index. Slight pullback will sure bound to happen, and then it will continue back its uptrend. We'll just have to see what will happen, coming news. Basically, in the first 2 weeks, the president election, Joe Biden will be sworn in as president, and we have to watch out for further news, because the vaccination right now is with the start of vaccination. A lot of things can happen, something might go bad with the vaccination, or the vaccination goes well, and the economy starts to reopen. Share price will continue to move up. Okay, so just monitor the news flow. This is the Dow Jones index, okay, and you can see here Dow Jones ended up the year 7.2% up for the year. Okay, and it's in a similar pattern as the S&P 500 index. Okay, this is the Nasdaq. As mentioned previously in many videos, the tech sector has been the strongest sector. Okay, so Nasdaq has been up 47% for the year. Okay, so it has been maintaining this uptrend for some time. Okay, so with such a smooth sailing, right, after breaking this new high, it's been moving on the up since for about almost 1.5 months. Okay, so most likely it might continue its uptrend for 1 to 2 months before we see probably a deep correction, something like this, back in August, September. Okay, so most likely I'll be expecting a New Year's rally to happen. Okay, the reason why I said that the US market will continue to move up is that firstly, they are all on uptrends. The index are uptrends, the market is strong, but I'm not saying that the economy is strong. Okay, the economy is definitely being affected, okay, by the COVID pandemic. But if we look here at the Federal Reserve balance sheet, what we can see is that the past few weeks, right, we are starting to see the balance sheets on the rise, on the uptrend. Okay, so if we go on a closer look, this $7.1 trillion, right, in assets was the previous high. Okay, if we look into here, yes. Okay, so this 7.1 was the previous high, and if we close in right now at the 7.4 trillion dollars of assets, which means to say the Federal Reserve is continuously printing money at a very fast pace to support the economy, support the country. Okay, so what this does is that because of this inflation, this rise or printing of money, asset prices are bound to go up. Assets meaning what? Businesses, which means your share prices. Assets meaning your Bitcoin, your gold, okay, so, and your crude oil and different commodities. Okay, so these are assets, and therefore it is explaining the reason why share prices are continuously moving or making new all-time highs, whereas the economic situation has not improved to support that all-time high share prices. Okay, so this is the main reason of this Federal Reserve Unlimited QE policy. All right, this is the Bitcoin to US dollar chart, and previously what I mentioned in the previous videos over here is that the price over here over the 200-day moving average is roughly about 1.8 times. Okay, thereafter, over the past 2 weeks, right, the Bitcoin had already rallied upwards. So at this moment, Bitcoin is roughly about 2.16 times over this 200-day moving average, which means to say the risk of it doing a deep correction is getting higher and higher. All right, so we should be expecting a pullback anytime soon once they hit a euphoric run. Okay, I would say this past few days, right, is already starting to be a euphoric run. Okay, so those who have position in Bitcoin should be careful of their positions. And over here we have the spot gold rate, the price chart for spot gold. And previously I've already mentioned that yes, it's testing here and it's starting to turn back up with this 1760 as the low. Okay, for this handle consolidation. All right, so it's ultimately still in a very big consolidation, but due to the Federal Reserve unlimited printing, chances of it to move up higher and breaking and making new all-time high, right, is quite high. Okay, so for those who have gold in your position, you can continue to hold on to it. For those who does not, I think it's still a good place to go in or in small positions. Now, if we look at our Asian market, if we look at this Nikkei, okay, the Japanese market index, what we are seeing here is a new all-time high made just before the year-end close. All right, so there's this rally happening on the 30th. And if we look at Hang Seng similarly also have a big rally. What we see here in the Hang Seng index is there is a huge rally over the past few days, especially on the 30th December. There's a big rally that broke off, this whole consolidation. So I've mentioned that once it breaks off this downtrend like a flag pattern, most likely it's going to continue its uptrend movement. Okay, so the next level that we should be mindful of, okay, or be careful, is somewhere around here, about 29,000 area. Now, if we look at the China market, this is the Shanghai Composite Index, is also giving a very strong signal, okay, that is most likely going to break and make new highs once the new year reopens for the stock market. Okay, so all these factors that I'm showing, right, is telling me that there will be a New Year's rally, meaning we should be seeing some rally happening in January, February. Okay, so do watch out, stay tuned to the market. Don't go off in a long holiday mood. All right. This is the Straits Times Index, and we ended the year at about minus 11%, down from the pre-COVID days. Okay, so what we see here is that the STI Straits Times Index has been consolidating in a small range for the past 1 month or so, okay, or 1 month, 1 week. So it is likely to continue staying in this range, and but the upside tends to be, there's a higher possibility for it to move on the upside. Okay, this is due to the factor that I've mentioned just now, where most of the other global indices seems to be strong and points towards a New Year rally. Okay, so we might be looking the same for the Straits Times Index. So let's take a look at the main driver for the Straits Times Index, which are the 3 banks. Okay, this is the DBS Bank. Okay, so DBS from its pre-COVID days, right, is roughly it's trading roughly around there. Okay, not much of a difference. Okay, which its main support is roughly at about $25. and the lower support here is at 23.50. okay, so these are the range that we should be looking at. Okay, so at this moment it's doing more like a small little down flag pattern. Okay, so it might break this go on the lower side, or even test this 23.50 area. So if that happens, right, that will be a good buy point, for the next move up. OCBC is trading roughly about 10% below its pre-COVID days. Alright, so this is the whole year in advance. So this is roughly about 10% down from previously. So what the OCBC Bank is doing currently at the moment is similar to DBS. Is trading in a range between this $9 and $10.30. Okay, so it's trading between this range, and we just have to wait for it to finish its consolidation. This is UOB. So UOB similarly is the weakest among the three banks. It's basically trading at about 15% below its pre-COVID days. Okay, so among the three, UOB is the weakest, but both, it has the similar pattern as the other two banks, trading in the consolidation at the moment. SGX, we compare it to the pre-COVID days, there is also not much of a difference, probably up about 28 cents from its last year's close. Okay, so we know that this run is because of some news that's about to happen, and when the news came out, it was actually a negative news, a bad news that caused this drop. Okay, so but thereafter it's been trading above the this drop, and trading in the consolidation in the tight range between this $9 to $9.30. Okay, so looking at it closer, right, it's been trading just below this this resistance area of about 9.30 to 9.40. What I can say that the chances of it to break on the upside is high. Okay, so and this 50-day and 200-day are all starting to turn upwards or pointing upwards. Okay, which means to say there should be more upside for this counter SGX. Singtel at the moment is trading about 31% from a year ago. Okay, so this drop is mainly because of its most of its complications deal with India. Okay, and they are being fined for certain rules or infringement. Okay, so but over here we have a rally due to the rumors of their digital banking license, and this is after the news that they got their license. Okay, the share price being sold down to this support region of about $2.30. Okay, and thereafter it has been trading above this $2.30, staying there stagnant. Okay, and very quiet. Alright, so what we should be seeing is that there is a likelihood of it to break on the upside. Okay, if this continues to be quiet, and then it starts to uptake, right, if the market is good, or if the so-called, what I mentioned, that the New Year's rally for the next 2 months is going to happen, chances of it to move on the upside is high. Okay, so do watch out for this. Okay, and if it does really break through, right, the next possible region that I would like it to test at least is the $2.80 area. Okay, which is the previous high. If you can break above, it's even better. Okay, now we go on to the REIT sector. What we are seeing here is the Ascendus REIT, and we can see from here Ascendus REIT basically did not have much gain or loss compared to its price over a year ago. Okay, so it's basically flat for the year, but we can see that there is high volatility in between. If you have bought somewhere here and then sold somewhere here, you are already up in a certain manner. Okay, but overall over the year it is flat. Okay, so what we can basically see from here is that this COVID period during the March drop, right, it dropped from its high about 36% down. Okay, now from this recent high, new high that it made, right, yes, it is already down like 21%. Okay, so 21% is roughly like a consolidation phase. Okay, it's a deep correction. So I mean, with businesses recovering, with economy recovering, business coming back, I don't see any further downside to this, and basically this $2.80 area, $2.90 area, $2.85 area, right, is that it has proved to be a very strong support for this Ascenders REIT. Okay, so and if the New Year's rally happen and this starts to turn up, then it all bodes well for all of us. Okay, this is Maple Tree Logistic Trust. Okay, from over a year ago, we can see that it has made some gains. Pretty good for a counter that survived the COVID crisis. Okay, so mainly because they are doing logistics, and there's a lot of businesses, consumers that require logistical services due to lockdowns in place and not being able to go out to get their necessary stuff. So Mapletree Logistics has done well during this crisis. Now, what we are seeing is Mapletree Logistics is doing a consolidation at the moment. Okay, with roughly a pullback of about 13% down from its previous high. Okay, so what we can see that this 190 area has been a strong support. Okay, with lots of volume coming in, supporting at this area. Okay, $1.90, and it's been very quiet, and some volume coming in to push the price up higher. Okay, so with this, most likely 190 is a major support region. Okay, and we should be seeing higher prices in the next 1 year. Mapletree Industrial similarly has done well during the COVID crisis. Okay, we can see that its price is roughly about like 30 cents higher from a year ago. Okay, so despite making new highs here about 330 something. Okay, so from its all-time high price, right, it currently has retraced back about 17% from its recent high. Okay, so at this moment currently gives about a 4.4% yield. Okay, and I'll expect it to do further consolidation in this area, because there's a lot of buying happening in here. There's a lot of price support over here, 270, 280 area. Okay, so I believe that is the major support region for Mapletree Industrial. One more logistical trust is the Fraser Logistic Trust. Okay, so this has done well over a year ago. Okay, and despite a very deep pullback, more like 50%. Okay, it has recovered well and made new highs. Okay, so at this moment it seems to be in a consolidation, but over the long-term trend, right, the trend is still upwards. Okay, with this 200-day moving average and 50-day moving average supporting, and it's turning upwards. Okay, so if it continues to break new high, it breaks this $1.50, it's most likely going to continue its trend upwards. A supporting trust for the logistics is the HBH Trust that deals in shipping businesses, mainly in Hong Kong, owned by Cheong Kong, or the Lee Ka-shing Company. Okay, so after many years of huge downtrend, okay, from a high here of like 80 over cents, sorry, I think it was like $1 plus, yeah, $1 plus, its IPO area. It's been down for over like 1 decade. Okay, to a low like almost to 10 cents. Okay, so in the 10 cents region, right, there is a major accumulation zone. It built a base, a very big base, and thereafter it broke upwards. Okay, and effectively turning it to an uptrend. Okay, so at this moment it's doing a small mini cup and handle pattern, and it seems like it's going to continue its uptrend movement. Okay, so those who have this, you can continue to hold it. On to the retail and commercial REITs. This is Capital Retail China with its new investment mandate covering all sorts of property, covering industrial, commercial, retail, data centers, and so forth. Yes, built a very strong consolidation pattern over here. Okay, and right now it's testing its previous high of 140 region, and looking at all the volume coming in to buy up, I believe it's going to break upwards, and start a new uptrend movement. Manulife REIT still very quiet, refusing to go down or go up. Okay, so we just have to be very patient with this. Capital Land Integrated Commercial Trust is a merger between Capital Mall and Capital Commercial. Alright, so at this moment it's done a very nice consolidation over here, and it seems to me that there is still more upside to come. Okay, so just be patient and hold on to your shares for this Capital Integrated Commercial Trust. Okay, mainly also because this is also a very big consolidation phase. Okay, so from its previous high, Capital Mall high of $2.72, it has mainly dropped like what do you call, like 45% from its high. Okay, so there's still room for it to move upwards, and as you can see that the shoppers are already going back to the malls. Okay, and with the relaxation of rules and increased numbers in public gathering to from 5 to 8%, there is more upside to come, I would say. So at this moment is giving you about 4.25% yield. Mapletree Commercial Trust is starting to slowly creep upwards. Okay, so we just have to be mindful of the overhead resistance, main resistance roughly about $2.24 area. Mapletree NAC, okay, with the current Hong Kong COVID cases dropping to below 40 cases a day, it seems that the government is quite good in keeping COVID numbers under control. So Mapletree NAC should benefit from this, with this movement. Okay, so at this moment is consolidating here at the intermediate resistance about $1. As I've mentioned before, from here you'll break your test here, you'll come down, and then most likely you're going to test here and come back down again. And therefore might be establishing a new uptrend to come. Okay, so just be patient. On our Singapore commercial side, mainly the Orchard area, with the festive season ending soon. Okay, so this is Landley Street with the Somerset 313. Is doing a nice cup pattern over here, and now it's pulling back, doing a handle pattern. Okay, so with this pullback, I would say it's shallow with the volume dropping. It's a good sign. Okay, so I believe there will be more upside to come for this Landley Street. As for Ngee Ann City, Takashimaya and Wisma Atria, we have this Starhill Global REIT. Okay, so Starhill Global REIT, as per its history, has been a slow stock, slow moving stock. Okay, so it tends to slowly creep up, on the uptrend. Okay, so this will be the same case also. Okay, so it's starting to move upwards, making new highs, as in like monthly highs. On to the hospitality sector. This is Ascott REIT. Okay, and what we are seeing here is that Ascott REIT is currently resting quite well on the 105 support region. Okay, so looking at this and more news information coming in that because of Hong Kong low number of cases or dropping cases, there is a very high possibility that they might start the air travel bubble again, probably in a month or 2 months time. Okay, so that will bode well for the hospitality sector. Okay, so this is Ascott REIT. Okay, and currently it dropped probably like 17% from its price over a year ago, from about $1.30. Okay, Far East Hospitality Trust, over a year ago is basically dropped quite a bit. It has dropped like about 18%, so it's about the same numbers as Escort REIT. Okay, and but the thing is, from the bottom of it, it has risen quite well, moving up almost like 100% from its low back in March. Okay, so at this moment, Far East is running on a intermediate so-called uptrend movement, and is currently consolidating at the moment. Okay, so once the consolidation is done, it most likely going to continue its uptrend movement. Okay, so if the Singapore economy reopens, tourists start to go back, most likely the Orchard area is going to see significant improvement of footfall from tourists. Okay, so Far East is going to be benefiting from it. The rest, like the CDR Hospitality Trust, after making a new high, since it's COVID's low, okay, it's consolidating. So we just have to wait this, let this rest for a while. It most likely might pull back a while, and then it comes back up. So mainly all three hospitality trusts are going through a consolidation phase at the moment. Okay, so is in line with the general market, moving sideways. On to the tech sector. One we should be looking at probably is the UMS. Okay, UMS has been moving upwards, creeping up to its resistance area about 109, 110. Okay, so previously I've mentioned in my video is that it's most likely going to retest here $1 and then rebound back up. Okay, so since then, from end of the year, it already done what I've mentioned in my previous video. Okay, so at this moment, most likely it's going to continue its uptrend. Okay, and most likely it's going to break on the upside. Okay, so you should watch this. Franken had already started to make new highs, with the recent move. Okay, so it will continue to trend upwards. Okay, so you should do take note. AEM is currently consolidating, but it seems to me that it might be looking to make a move on the upside. Okay, so if we look at its major customer that is serving, Intel, okay, there seems to be a lot of buying upwards. Once it dropped below, it start to have some buying happening. Okay, so I do not know, probably results could be good, or because of working from home, staying at home, more people are buying more computers, more laptops, to have access to internet and social media platforms, or even Netflix. Okay, so that might probably drive chip sales, and in the end, of course, service in terms of AEM cleaning services, it might boost their earnings. Okay, so do note also earnings is coming soon, next month, probably end of next month in February. So we should be expecting something to happen over the next 1 month. Valuetronics similarly has been consolidating. I've been mentioning in the video, it's been very quiet. Okay, so just do watch out for this. Okay, so if it continues to trade sideways in a much smaller band, you should be mindful of that. Geo Energy Resource. Okay, previously I've talked about this rally. Okay, so at this moment it's been trading in a small consolidation, and at the past few days, right, a very tight range. Okay, with a huge volume in this trust bar. Alright, so looking at this, there might be reason, right, for it to move upwards from a technical perspective. Probably the main area you should be looking at is the 20 cents area. Okay, so I mean, it's a nice trading range, for those short-term traders. Credit Bureau Asia is a new IPO stock. Okay, why I'm mentioning this is because it has done a new all-time high. Okay, it's a new IPO stock and done a new all-time high, and I mean, this bodes well. Okay, so what it does is that they do credit reports on consumers, around in Myanmar, Singapore, Malaysia, Cambodia, okay, in the Asia regions. All right, so and they are promising from their prospectus, right? They are promising about a 90% payout for dividends. So probably is what I would say stable business, from financial institutions, lending companies, banks, that there will be majority will be their customers. Okay, so I would say they most likely will be having stable earnings. So a high dividend payout ratio. Not too sure whether it's feasible or sustainable, but we should probably look more into it. But anyway, this making a new all-time high is technically, from a technical perspective, right, it's a strong stock. Okay, so if you can look for it to pull back, you can look for opportunities to enter. Okay, so this is a new IPO stock, Credit Bureau Asia. Okay, so that's all I have for today. Hope you guys have a fantastic new year ahead. Okay, and let's all make money together. All right, see you guys next week.